Hey guys, it's Chris Wong. For this video, I'd like to talk about why I would prioritize building a portfolio first before considering buying an expensive car. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio. So based on conversations with other people, what I see in social media or movies, usually most people seem to prioritize buying the expensive car first before considering building a portfolio or building some savings. But usually people who prioritize building a portfolio first, the goal is to get wealthy first. So generally to build a portfolio or to build wealth, the focus is to purchase assets, either like real estate, stocks, bonds, ETFs, just anything that actually has a long-term trend to go up in value, something that can actually generate some cash flow or just like generate some income. So if the main goal is to get wealthy through building a portfolio, then an expensive car is considered a lowest priority because cars depreciate in value and cars itself don't generate income. The total cost to finance or the total cost to lease will cost more than just paying cash for the car itself. So for myself, whether the car is new or used, I want to make sure I can actually afford the car. So if my main goal is to build my portfolio, then I have to make sure I can actually afford the car if I need a car to drive. And if I feel like I can drive an expensive car in the future because I build up a great portfolio, then that's something I can consider. So the portfolio I'm trying to build up consists of Canadian and US listed ETFs that are related to the indexes like the S&P 500 or the NASDAQ 100. And my main goal is to try to build as much weekly or monthly dividends. For years after listening to Dave Ramsey, I always believed in paying cash for anything or paying cash for the car. So there'd be no financing, no leasing, and only buy if you can afford it. Being able to afford a car means having the cash to pay for the car, not going to debt to buy the car. After investing for several years and learning about margin investing, then I changed my thoughts about paying cash for the car. Now, it's still something I do recommend to a lot of people or suggest it to a lot of people because not many people have the stomach to handle margin and not many people still have the stomach to do investing in general. So someone who's been investing for several years, I believe in having the dividends try to fund the lifestyle. So if deciding to finance or lease, if your dividends is a lot each month and it's a lot higher than what the payment for the lease is, then I don't see a problem to use dividends to pay for the lease. So for example, I like investing in the Canadian and US listed ETFs, something like YMAX for a US listed one, and something like HYLD by Hamilton ETF for a Canadian one. If the monthly or the weekly dividend adds up to at least, say, $10,000 consistently, and the lease costs $1,000 a month, then I don't see a problem of spending $1,000 on a lease if the dividend is like $10,000. The goal of someone who is willing to work towards building a better portfolio, the goal is to still build a better portfolio. So for that same example, $1,000 a month on a lease and a $10,000 a month of dividends, if there's still a lot of money left to reinvest, then the portfolio is going to get bigger and the next month's dividend is going to get bigger too. For the average person that actually finances or leases a car, most people would have to actually work a full-time job and then they actually have to pay their monthly fee every single month with their job income. And their job income could be from a job they don't like. So if I were to compare trying to prioritize building a $50,000 portfolio versus buying a $50,000 car, financing or leasing it, let's say if I try to build a portfolio first, just purchasing HYLD, which is an all-in-one type ETF or S&P 500 ETF by Hamilton, and the dividend per month is like $500, and that's a 12% dividend yield. So it would take about 8.3 years to get $50,000 of dividends without even reinvesting anything. That $50,000 of dividends in 8.3 years, plus your original investment, whatever value it is, And in the long term, in the stock market, it should go up as well. Now, if you were to compare that to purchasing a $50,000 car, all that money you spend from your work to buy the $50,000 car, it's gone. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.